afternoon. It's a sunny afternoon in London. Looking forward to a nice week ahead, apparently. And welcome to the Educate2trade podcast with me, Chris Pollock.
And me, Z.
Hi, Z. How are you getting on today?
Yeah, it's been a pretty eventful week, especially in the markets. And I'll go straight into it. I've been on the computer all the way through with sort of my blockchain stuff, but I've been also looking at all the moves from Wednesday onwards. So we started off, I think, if we conclude what the market is showing right now, NASDAQ has dropped about 300 points. S&P has dropped about 80 points.
Yeah, it's not a pretty day out there.
And gold has made all-time highs again. What I want to do this week is sort of decipher why these moves happen and why we're where we are right now in the market. So let's start off with the economic calendar.
Well, yeah, let's start with Monday. I wasn't in on Monday either. I was away playing golf on Monday, first couple of rounds of the year. Played fairly well, so that was good. But let's have a look at what I missed. It was a bit of a bit of conflicting data really coming through on Monday. It's PMI day. It's normally a really, really good day. But we had the French PMIs, German, Europe, UK, and then the US ones. And we'll talk about the time that these sort of things are coming out in America, again, because things are changing back this weekend. But as you can see, there was pretty mixed data, right? Manufacturing stronger in Germany, services down. Stronger manufacturing in Europe, services down. Weaker manufacturing in the UK, I mean, I'm not surprised, but services up. And then manufacturing down in the US, which maybe was a surprise to me in a Trump world. US manufacturing optimism you would have thought would be higher. Yeah, that came in below 50. That means contraction territory, so that's not ideal. But then there's services surprise. So a little bit confusing, the data for me. So I'm kind of pleased I wasn't here to trade it. I could have made a mess of that, Z.
Yes.
And to be honest, when you get these conflicting releases, you'd rather see both strong, both weak. When you get this, it makes it a little bit trickier to think about what the market's going to listen to. You've got to really be more patient with your trades and maybe give it till the end of the time print or a little bit of time to settle, and you can start to see those flows coming through. So Monday happened. I'm not taking too much away from Monday, although it was an up day after the option expiry. That was the first trading day. We had the budget in the UK, right? So Rachel Reeves, talking up her book, as you would say, saying how they're going to put £500 in the average working person's pocket. Well, saying that the OBR are saying this, but at the same time suggesting GDP forecasts now not 2%, just 1%. So, and when politicians tell you something negative, you can probably expect something even worse. Absolutely. In the post, right? Things are never quite as good as they say when it's something good, and when it's bad, it's probably worse than they're leading to. So, yeah, take what you will from that. The big man has been speaking often. We'll talk about him a little bit today, but I really want to focus through to Friday, right? A week is a long time in markets, so let's not look too far back. Today, we had the Fed, Mr. Powell's favorite inflation metric. Now, inflation has been lower on the CPIs a couple of weeks ago, lower on the PPIs. UK inflation was down this week, but just before Rachel Reeves did her budget, which was pretty good. And Spain this morning, the inflation story seems to be softening, right? So when we look at the data in here, we were expecting a 0.3 read and we got a surprise pop. Now, let's look at the history of this. Like PCE, the economists are pretty good at getting this right. And if you want to scroll back in time, well, there's not a single positive, or I say positive, higher than expected PCE print until you go back to May of 2023. So this, I think, was a bit of a shock to the markets in a world where CPI is down, PPI is down, CPI is down globally. The Fed are actually seeing in their preferred metric inflation popping higher. So 12:30 today, right? This figure came out, and let's have a look at some of these market reactions as we zoom into the shorter time frames. While this gives you a bit of a hint on what's happened today as a whole, but from 12:30 today, there was a nice little trade here. Let me zoom in a tad more for you so you can see it that little bit more clearly. If we zoom in, here we go. So we had a little bit of a rug pull on the markets, a little bit of was some wiki action. The PCE data was out. I think it was at 12:31. It was a little bit late, which kind of created a little bit of uncertainty in the first instance. But wow, I mean, it was a down move. This was a trade we took. Didn't hold it the whole way, but did pretty well out of this one. Then we had the market open, and we had a little bit more data coming through. Little ramp up before the market opened. Remember, it's at that earlier time still at 1:30. If I can bring this over, where are we here? 1:30. So right on the open, another little bit of weakness with a spring back just into these areas we've been trading in before, a little bit of a kind of impulsive move back. Maybe we wanted to check this. But then more news came through. We've had, well, probably better to show you this on the economic calendar here, Michigan survey. So this is revised, right? This isn't the headline flash Michigan survey of consumer sentiment. This is the revision. And both the revisions for consumer sentiment were lower for the expectations and for the current sentiment. And also we have inflation expectations, which were both higher again. So from a week on a month, really, when inflation's been lower, today we've been hit twice around the chops with two higher inflation figures. And who cares about inflation expectations, you might ask? Well, inflation expectations are probably one of the biggest kind of indicators of what public spending will do as a result of inflation. If people believe there will be inflation, they will act as if there is already inflation. So this is kind of a double whammy just on this data print of worse consumer sentiment, worse spending, and worse inflation, higher inflation. Both of these, this is kind of putting the Fed in a box, right? We've got higher inflation, but we've got lower growth. Do they cut rates to help the growth? Do they have to raise rates to fix inflation? I know what Donald Trump would choose. And then shortly afterwards, we had the Atlanta Fed GDP Now figure. Those of you who've been long-term listeners to us will know we brought this to you when it first surprised us. If we go back in time a little bit, this was always reading 2s, 3s, 2s and 3s, 2s and 3s. And then on the 28th of Feb, on a Friday, one of our podcasts, we noted that this had come in lower, way lower for the first time, citing recession incoming. And these figures come in at really strange times. Sometimes they're 2 days on the bounce. Sometimes you don't get them for a week or two. But today we got another little hammer. It kind of eased itself off a little bit with 1.8s, and then boom, 2.8 once again. So again, if you look at kind of 3 o'clock on these numbers, working out how to use the max again. If we look at 2 o'clock, 3 o'clock will be next time. We had this bit of indecision, and then by the time the GDP Now numbers came out, we were really into a hell of a sell-off today. It's been a pretty monumental decline in markets. We saw 350 points off the Nasdaq, 80 points off the S&P. So far, not that pretty. However, there had been a little bit of life. Those of you who've kind of traded through Trump's first presidency will have heard of something called the Plunge Protection Team. This Plunge Protection Team were apparently bankers he would call to try and buy in on any dips that came through. But he's taking matters into his own hands today, and he made sure to have some positive comments at 3:10 today on his Truth Social account. Finished speaking with Prime Minister Mark Carney, the former Bank of England head, now the Prime Minister of Canada. Extremely productive call. We agree on many things, and we'll be meeting immediately after the upcoming election to work on elements of politics, business, and other factors. It will be great for both the US and for Canada. So he's trying to, I think, take away some of the fears that are very much on the horizon, right? We've got a big day coming up on Wednesday next week, don't we, Z?
Yes.
They're calling it Liberation Day.
Liberation Day.
I wonder if there'll be a public holiday in America at some point on Liberation Day. Sounds like the sort of thing.
Absolutely.
So yeah, do you want to lead in with Liberation Day? Have you got any thoughts on what might happen on Wednesday next week?
I think so the way I see it is I sort of compare it week to week. So if we go into macros, if we go into the charts here, what I sort of start off with is when we look into S&P, for example, we made higher highs this week. Last week. So we started off consolidating with highs being made, and then so if we take it to the 1 hour chart here, what we see last week sort of gave us highs. So we made highs, and then this week we took out lows, right? And we were sort of setting up for all the tariff talks that are happening. So we had Mark Carney, as he sort of kind of pointed out, he's been on the defense. The tariffs have been starting to hit the sort of, you can say, the indices a little bit. They've been hitting the energy companies a little bit. And into an article that I started to look into today. So today, Elon Musk talked about it, but car companies have been hit hard.
Donald, once again, he's been having some chats with them, hasn't he?
Exactly. So the news sort of points out Musk says Tesla not immune from tariffs as car firms hit. So we've seen this sort of happen before in the Trump era, where sort of you have shocks to the system, and so we see that with the news today that came out today through the PCE. but I also see it sort of follow up into the week coming ahead. We speculate to see if we sort of come back to sort of the higher highs that we sort of left off on Monday, but I predict that we sort of go even lower as the week goes. And we go lower, especially with gold. I mean, gold today has come back to its all-time high, right? So if we look into gold right now,
day by day, just keeps punching them.
So when people lose confidence in these sort of economies of scale, so forex and in indices and stock, what happens to gold, Chris?
Yeah, it's the safe haven trade, right? And it's kind of a hedge against when bonds aren't working. You might want to try something else.
Absolutely. So I think next week we have Liberation Day on Wednesday, and we have a bunch of news, but we're going to have a bunch of tariff commentary that happens from Trump. I see him be really active on Truth Social, especially after speaking to Mark Carney, speaking about, because I think Carney's been on the defense, the China ministry has been on the defense. So next week sort of sets us up for some more good trades.
Yeah. Well, just back to that car factor you were mentioning as well there, right? Donald's had a chat with these the leaders of the US car industry and said, hey, you've got these tariffs, but don't you even think about putting up your prices? And it's like, hang on a minute, you're making us eat this? No. The American consumer needs to eat these tariffs, Donald. This is the bed that you're making. You need to sleep in it. And he said that the White House would not look favorably on any car manufacturers who kind of price gouge. But we're already seeing this, even in the second-hand car market in the US. They're seeing like $1,200, $2,000 premiums on second-hand cars because they know what's coming. And there's been some, like, if you go kind of search the charts on this, I should have dug it out for you. I think Jim Bianco was putting out a really good chart on the deficits. And we've seen kind of the biggest 2-week deficit in history in the US as a lot of these kind of stockpiling starts to happen for these companies. A lot of buying is happening now because they don't want to pay the tariffs that kick in on Wednesday. So what that makes me wonder is kind of like, that's going to skew all the data a little bit into what's happening from a manufacturing side, because the inventories are going to be super high. But are they actually going to be able to shift this stuff, given that everything's going to be priced, 25% higher, or maybe not quite that much, but there's going to be price impacts on what the consumers are going to be paying in the US. So I think like this next kind of 6 months might be really confusing in data from kind of 1 month to the next, as we get really strange reactions to the tariffs. That's indeed if they do go through, right? I mean, we've got till Wednesday. Those of you trading and holding things over the weekend will be very, very brave, I would say. Donald could say anything this weekend. It would not surprise me if he just pulled the plug on 1 or 2 of these things, or at least mediated. But let's see what happens over the weekend. I'll be flat as always on a Friday night, especially in a Trump world.
What I've been sort of busy doing, Chris, is I've been looking at the Tesla charts a little bit.
Horrible.
And they look horrible, but we know it's the future of the automotive industry, and you buy dips on these things. So when you talk sort of tariffs as an investor, you're looking for dips. So for me, I'm sort of speculating to see if 262 for Tesla is that final dip before we consolidate and then sort of go back up. Some sort of folks think we go even lower than this, and the tariffs sort of sink in on Wednesday with Liberation Day and how the week sort of comprises. You as an investor, would you be buying dips on Tesla, or do you think it'll go even lower from here?
Well, this is always the thing with news. We know it's not unexpected, right? We were expecting the tariffs to come through. Let's hypothetically say they do go through. They probably do go through in the way that we've heard on Wednesday. This has been reflected in prices, right? This is one of the reasons we've had these big declines. And why we're still seeing them, why there's still uncertainty. And stock markets and investors, they just hate uncertainty. So a lot of if you look at the kind of the sentiment on a lot of these kind of money managers, they're like, well, I don't know what to do with my money, because I don't know from one day to the next whether these tariffs are going to exist or not. Once he presses go on this and we get them, it can be one of those situations where you hear like, buy the rumor, sell the fact. Well, this might have been sell the rumor, buy the fact. So you might get that final kind of flush, and I wouldn't be surprised. I know we talked last week about the SPX hitting down just below this low, 5,500, a big put level just below the low that we had from March. I was saying I wouldn't be happy until that's touched to go long. So if you're asking me to go long on Tesla, I'd maybe want to see that happen first. Whether that means a new low on Tesla, who knows? But yeah, I wouldn't be breaking my neck to buy into that, I don't think, just yet. So yeah, I think there could be a little bit kind of not flash crash, but a heavy volatility next week. But if you see these stock markets can shake off bad moves pretty quickly, it's I think about the 30th time we've had a kind of 5% or more decline since the great financial crisis, and yeah, the vast majority of them don't last very long, and we turn back around and have posted all-time highs after every single one of them. If you want a view for this year, in the face of all of this horror, I would still suggest stocks could pop another high potentially.
So at the trading floor here, Chris, we sort of educate folks on smart money. We educate them about order flow, and we make them look at zones. Mm-hmm. When we look at the S&P here, and I think your zone is somewhere around here at sort of 55.44. Would you start to take an interest if we sort of tap into this zone here to see where we go?
Yeah, well, it's basically right below this low. I think it got within about 5 points of my level. And it was like a really big put gamma level that we'd seen for about 3 or 4 days. It was by far the biggest exposure. It's very rare these things don't get traded, and we leave that in the distance. The market's super curious, likes to hit levels. This 5,500 on the SPX is one of those. We got to 5,600 today, so it's only 100 points away. It's very achievable. So how would I look to trade this? I would like to see this hit. If it is, it could easily flush, right? Especially around the middle of next week. That would not be a surprise at all. But if we can then go and reclaim it, if we can then put in kind of a nice like rejection on that sell, then that would open me up to start looking more on the long side. We talked about the seasonality on here last week, that normally by now this is the stock market's peak kind of performance. So if you can give me kind of a flush and then give me a little recovery above that level, I'll start using that as a level to jump off, I think. And then maybe targeting on the swings further up towards those all-time highs, if not maybe above them. That's my takeaway on how to look at next week. I feel like given the action we've had since Wednesday, it looks like it's got that number in its sights to me.
My view is we could go even lower. So if we do take this low out here, because we sort of bounced from it before, I think if we sort of tap this here, I think it would have to sort of go even lower before it really comes back, right? So for me, my area is sort of 5154 on the S&P. And I'll keep an alert here at your level here, but I will see sort of to see if it consolidates around here or does it really just go for the low. That's my sort of viewpoint. I think there's a bunch of liquidity below here, and I'm sure if we look into the footprint, we'd find a huge order back here on the sort of August 24th, 2024. I'd go back into history and I'd find huge orders here. So I think a bunch of stacked imbalances still to wait before we go back off.
Oh, there's always stacked imbalances lower on stock markets, right? You always leave little gaps here and there because it's just the nature of the beast, right? They go up and to the right typically. But yeah, maybe these two things work together. If this 5,500 level does go and it can't be reclaimed, it will become some sort of resistance, right? So I think that's a pivotal level. If we do get there, who knows? We may not, but I think judging by current price action, it looks like it wants it for now. Gold's an interesting one, like as you were saying, talking about gold, looking at this all-time highs. It's kind of, this is the adjusted contracts. Let's maybe fix that for you. The moves that we've had to these all-time highs the last couple of days, and we've seen a hell of a move. Normally, this turns into seasonally not a particularly strong time for gold. So if we kind of get through these tariffs, we know what they are. They're in black and white, and they've been applied. I guess we need the bond market to start reacting a little bit more as a hedge to the stock market in a way that it hasn't been. If you start to see that stock and bond correlation changing back to its normal kind of inverse correlation, then gold becomes less of a useful asset as a hedge. So for now, I'd be looking on the long side. But as we were saying in the call this morning, this gold, if we kind of scroll back in time to kind of peak geopolitical tensions back in 2022, we had this big ramp up. Here we go. This kind of $300 move in about 6 weeks. Well, it ended with absolute capitulation, right? This war did not end. The war is still going. But this move, because of the war, was eaten up with about a $75 down day, right? This was 3.5% from open to close. If we were to do 3.5% move back down again, you're looking at $110, right? If we got something of a similar sort of magnitude. Wow. So I wouldn't be buying gold long without stops. I don't mind being long gold, right? The trend is your friend. But when these big moves occur, and this was all-time highs at the time, you normally get these huge kind of gluttonous moves towards the end. But when we get them, just be mindful of the way down. And actually, the way down is often easier to trade. I traded gold a lot over my years, in my formative years as a trader. And trust me, when it wants to go down, holy shit, it can go down.
Yeah. Here, I mean, we try to educate folks when they're looking for trades and they're seeing an asset or they're looking at a commodity make an all-time high. They're looking for longs.
Of course, and as you should be.
As you should be. But in the short span of time, you look for reversals. So I think it's important to always look at sort of reversals being taking place in the short span of time. Because if you sort of long and FOMO an all-time high and this thing pulls back on you 300 points or 200 points, then you're sort of, I've been there in the past where I've sort of shorted a wick. I mean, I longed a wick and I really suffered. So
yeah, you don't want to be selling all-time highs, right? That's not certainly not what we want to be doing. You'll get poor doing that. But if there is a sign, well, maybe as a strategic play, is always you start, if you do see a way that this turns around, maybe there's a momentum day that you can take advantage of there. I almost wouldn't care about price particularly. If the momentum's in there, I'm happy to just get rid of the stuff and see if we can kind of run it. Because if it does roll over, you might not see those prices again for a few months or even longer. So I'd be keen if we did see that sort of action to get short. But yeah, for now, I mean, there's enough of a range in this stuff to just not even worry about that. You can do, you're getting $10 ranges from, day to day, like these ranges from the lows here. Where are we? At double O's, the high up here, 21s. Like you're seeing huge like $20 ranges. We saw the same thing again yesterday. And that was a move up on Friday, but again, we were up $20, down $20, up $20. If you like volatility, and these were all order flow levels, right? If you want to put on these, you'll see these trap buyers and trap sellers coming in here at both this high. You can see the buying that was done in here was kind of trapped. They were stuck, and it washed them out until the sellers came in too aggressively and they got washed out. So order flow is a really good way of trading in these highly volatile assets. So yeah, maybe if you haven't looked at that, maybe it's something you can start to investigate or reach out to us. We may be able to help.
Awesome. So we've covered quite a few different subject matters, and us as traders, like we look for volatility. We look for Trump to do the sort of Truth Social tweets. We look for a bit of conflict, so it gives us these setups, And then when things are sort of calm and collective, then we look for ranging patterns. I think currently we're in a sort of trending market. Sometimes we're trending upwards, and currently we're trending downwards on the sort of different assets. So I say we look forward to the future. We do our chartings. We keep our levels like we did for S&P, and we educate people on how to hold these sorts of trades and how to do their macro. Like for example, I think when we trade, we get into our micros quite a bit, and we go into our 5, 10, 15 minute or maybe a minute chart. But when you have sort of a trending market like we do right now with Trump, you should always look into macros and always be zooming out.
Yeah, I mean, today is a prime example. If we can look into the short time frames on the S&P, let's take a look at the chart again here. We've got a little bit of a delay on my chart delivery, but hopefully Russell will pull through.
Russell?
Here he is. He's woken up.
There's comments.
He's trying to edit the naughty ones away. But when we have this bad news, like you don't want to be fighting the news flow at the moment. You're getting news from one day to the next. When Trump makes a comment, from one day to the next, markets are moving. Today, you did not want to fight all this bad news. You had a huge down day. You didn't have to be a genius to kind of sell this thing, right? There was a lot of opportunity. You could have been forgiven for getting stopped out on the open. But don't do all your bullets in the first 15 minutes of the day. If that was the case, you'd probably been able to come out of this day looking fairly pretty. So yeah, an interesting day for sure. But yeah, don't forget about the news. We hear a lot of traders coming in here, especially younger traders who pure chartist, pure technical. You can absolutely make money doing that, but I think there's a limit to how much money you can make in a year purely with technical analysis. Whereas if you were to kind of trade the news, there is not unlimited money, but you hear about people doubling their accounts in a day, not people taking outsized risks either on big news events. If you can catch them right, I'm not talking about data like this, but big, like Brexit, for example. One of the best traders I ever heard was he doubled his account in a day on Brexit because he saw before anyone that the votes were coming in the other way, and he just got into the gilts at the right time in size, and that saved the day and made his year, right? Probably made his career. So these opportunities, you have to be aware of the news. That probably leads quite nicely into next week, right? We've got tons on the horizon for us next week as well to get our teeth into. What are you looking for? I'm probably most interested in this Liberation Day, I have to say, but there's lots and lots of bits between now and then. PMI week.
We got PMI.
German CPI, okay, fairly interesting. Getting interest rate decisions in Australia. More PMIs, this time on the manufacturing side. Sadly, at the same time as JOLTS. But this is all back to 3 o'clock, right? The news is at 1:30 and 3 again. The US opens are back to 2:30 UK time. Closes at 9, so we're back to normal, which maybe is better. I'm still fairly happy with the way it's gone of late. But this week culminates in some more ISM data in here with the non-farm payrolls. What is going on with the employment story here? Really interested to see. And Powell's on the wires immediately afterwards. So going to be a hell of a week with Trump's Liberation Day, the kind of meat of that sandwich.
It's the first week of the month. We're going to have Fed Chair speak. We're going to have Trump do his Truth Socials. We're going to see a bunch of movement there. We have Liberation Day on Wednesday. So there's a bunch to look forward to next week.
And it's April the 1st, right? April Fools. Maybe we should not use Trump in that context on a public platform. But it's the month end as well on Monday. Month beginning Tuesday. There are natural flows that happen at these times, I think we've touched on before. Be aware of those, that kind of pension fund selling, end of the month, maybe a bit of buying at the beginning. These are some of the most consistent flows that you see in trading. So be mindful of them. Don't always work like anything, but more often than not, you'll do okay.
Absolutely. Chris, I think we have some comments.
Okay.
Some of our...
Blandy has said, also had a great week trading gold, but I didn't see any news overnight for the huge push. So I just believe it's because we broke the all-time high.
Well done, Blandy. Yeah, you just trading gold still. Why not at the moment? I mean, there's worse things to be trading when it's this hot. Maybe you need to keep your eye on something else when the market settles down, but that might be 10 years from now. This is peak gold at the moment. Mm-hmm. Anyone else out there for us?
No, that's all the comments I can see.
All right, thanks, Alex.
Awesome.
Cool.